Now, as we pivot to Europe, you can see that things are not as bad as they were expecting. And it's some things were bigger drivers than others, and it's important to look at the different components. So the consumer confidence in all of the Eurozone aggregate was expected to be coming at negative 20, came at negative 20.9. So there's still that consumer pressure, which is something that we've talked about given the issue on wages and the pressure on real wages, continuing. But Eurozone manufacturing was expected to be at 48.5, came in at 48.8. Eurozone, the services was expected at 50.1, came in at 50.7. Composite was expected at 49.8, came in at 50.2. So it's slightly in expansion, which is a positive. But the big piece that we've talked about, and we've said it before, whether it's 49, 51, really 49.5, 50.5, when you're in that, that's a bit of a margin of error based on one thing might have been swinging you in one direction. And it's not really sticky in the sense of it could easily reverse back down. So at 50.7 on the service side, that's a positive. Manufacturing continues to be a problem, which is an overarching theme when you consider that Europe and some of the key nations are net exporters, which is could be a much bigger problem. Now, PPI, when you turn to Germany, PPI was expected to be down 1.2%. Instead, it came down 0.4. So what we've been saying, and again, everybody is continues to expect this gigantic collapse in inflation. And this is showing you that, is it getting better? Yes. It's just not getting better at the pace everybody's expecting. The rate of change is much shallower than is what people are calling for. And then the year over year was expected to be at 20.7. Instead, it came in at 21.6. So you still have a lot of that component buffering. Consumer confidence was expected to be at down 33.3, came in down 33.9. Now, when you look at the manufacturing side and you look at Europe versus Germany, so manufacturing was supposed to be at 48, came in at 47. So the manufacturing front has gotten worse. But services side was supposed to be at 49.5, came in at 50.4. So that was a nice surprise to the upside. But manufacturing, with Germany being a key exporting nation, is a problem when you look at how the economy is going to progress through this quarter and really into next quarter with manufacturing as weak as it is. So the composite still came in contraction, but at that 49.7, which is, again, kind of that just no man's land based on where we are. Business climate was expected to be at 90.3, came at 90.2. Current assessment, 94.9, came at 94.1. Expectations slightly better, it's coming in at 86.4. But still, again, that pressure is still there across the holistic Germany view. France retail sales came in weaker, as we were saying, for December at minus 5%. Business confidence and manufacturing confidence right in line. Production outlook indicator came in a bit worse at negative 8. And then when you look at composite PMI came in at 49 instead of the estimate of 49.5. Manufacturing was slightly better at 50.8 and services slightly worse at 49.2. So you're still kind of bumping along the bottom of some things are kind of in expansion, some things are kind of in contraction. So realistically, we've gotten to this point of contraction where you're in a bit of a recession, but it's not going to negative 20%. It's just you're bumping along in a no growth scenario, in a slightly negative growth scenario. That is not a good thing. Everyone's like cheering that. It's like, oh, well, we're not going to find the pits of hell. Well, nobody said you were. It's just you're not showing any growth, and the pressure's going to remain. And this is something that's being reverberating throughout the rest of the world. Consumer confidence in Italy came in well below estimates at 100.9. with manufacturing confidence above estimates of 102.7, with the economic sentiment improving. But it's important to consider Germany, because Germany is going to be the big driver here. And you can see that the business climate is still negative. It's still weaker, but improving as we go forward. Now, the problem is on the business expectations, you're bouncing off the bottom, but you're leveling off. And that's a key piece where people are starting to accept. It's like, look, we're going to be in this slower growth, no growth, and realistically negative growth scenario through the rest of the year. And you're starting to see that get priced in. Manufacturing is showing something similar when you look at the expectations. Service sector, again, starting to level off at that negative level. Trade, again, improving, but not by much. With construction, a massive overhang, and we don't see construction improving, which is going to be an overhang for the local economy as the service sector, construction, and manufacturing continue to be that pressure point. And here you can see consumer confidence bouncing, but you get an idea of just how low it was. And it's not like it's bouncing way up. It's still remaining in a negative trajectory. And this just puts into context where we are on the composite side for the Eurozone. It's okay, we're kind of bouncing around. And now we think it cheats negative and cheats into contraction, but not back to 45. It's just, or do we go to 48, 40 and a half? Sure. 49 even, like we're going to be in that level. And the manufacturing PMI, just looking at France, you get an idea of kind of where we are. Now, when you look at German manufacturing versus service PMI in France, the two largest economies, you're seeing how we're kind of bumping along this bottom point. But then when you look at incoming new business, so incoming new business for France is going further negative. So again, indicating more downside on the French side. And then German services is showing actually slight expansion. So they're almost flipping in terms of where these expansions are and the possibilities, and they start to balance each other off, which is why we see that pervasive kind of zero to negative growth really impacting. Input prices, you can see going further down at 63.2, but it's still expanding. So yes, it's come down, but you're still at a very elevated level. German input prices, something similar, where they're getting better, but still expanding and still showing that underlying issue for the consumer. French services input prices have flatlined and started to turn a bit higher, not here, but just what we know of as we go through this year, through this month. And that's, again, some of that staying power is going to show up in the inflation data, with input price components turning down a bit. But again, inflation is still higher. Even with that composite PMI, the input price component coming down, going back to 2002, you're still at the highest level ever, obviously taking out the spikes from 2001 and into 2002, 2021 to 2022. But even though you've improved, you've just improved to the worst it's ever been. So it's important to historically speaking, again, off the highs, but you get an idea of where we're sitting in terms of these pressure points. So then when you look at, again, honing in on the business expectation side, still in that negative trajectory, but the German building permits softening. So you're actually seeing construction was already weak, expectations were weak, and now they're getting weaker based on permits, which is why we see that continuous overhang. German PPI dropping, but you get an idea that it's still the highest it's been going back to 2005. And then when you look at German negotiated wage growth, you can see the nominal versus real. And this is the problem we're talking about. And it's showing up in the data sets where real wage growth is steeply negative. And that's why we see, even though we've had some expansion, we've seen some bounce, there's still a big overhang on who is your buyer, who is spending, and we don't see the consumer coming back in a meaningful way in Germany, in the rest of Europe, and that's going to keep any type of benefit capped. And that's why you're just going to kind of bounce around in terms of where you are between no growth and negative growth, which is why we see this continuous problem on that front. So that's what we have for you on Europe. In the next segment, we're going to go deeper into Asia, and we're going to kick it off with China and some of the things that we should expect as they come back from Lunar New Year.